Welcome to the Mines and Money online precious metals forum. I'm Jake Klein, Executive Chairman of Evolution Mining, and it's a real privilege today to be able to be talking to one of the veterans of the industry, someone who's had real success over a long period of time, David Baker, founding partner of Baker Steel. David, welcome.
Thank you. It's good to be here.
Yeah, well, tell us a little bit about this journey of, I think you said 35 years in the industry and as a fund manager.
Yeah, 35 years. I started, I did metallurgy at university and worked on the mines in Broken Hill. And after a few years there, did a master's in finance at Imperial College in London, got into broking and joined Mercury Asset Management and started into fund management. And in 2001 with Trevor Steele, we set up Baker Steel, and we've had a interesting journey, and 20 years on we're where we are. But it's been a fascinating journey. You know, when I started in broking, I think we're just coming out of the massive bull run in gold and coming down the backside of the gold market and analysing gold shares, and they were on crazy valuations, very different to today. So it's been an interesting journey.
Yeah, what were the valuations back in the 80s?
I remember, you know, starting looking at companies 3-4 times net present value, right, which is unheard of, you know, and we used to spend a lot of time trying to understand why these gold mining companies used to trade at such rich valuations. Now it's very different, obviously. You know, we're seeing companies on price and net present value below 1, if not lower.
So you're still using price to net present value as a measure?
We use a lot of different tools that you have to in this game. Price to net asset value is a good one. I like looking at dividend yield. Never used to look at dividend yield before, and now, as we know, the mining companies are starting paying out more in dividends, which is a very good sign. It's a very good sign of a healthy market. I think it's fascinating in that the sector is one of the lowest rated sectors in the general market, particularly in the US. The dividend yields, although they're not massive, I can see that there's potential for them to increase, and that's fascinating. You know, that the shares have been derated so much.
Yeah, we're in such a low interest rate environment, and yields investors being starved of yield. Gold companies are delivering decent yields now.
It's fantastic. You know, you look at Newmont. You know, I think it's probably on around 4.5% dividend yield. And you know, the way that we look at these companies, we're interested in the dividends per ounce that they produce. And so, if a company paying out around $300 an ounce, which is what it seems to be around that in the sector, you know, you can get some very healthy yields. Not all of them pay that, but I think that's a bit of a benchmark at the moment.
Yeah, I'm pleased to say that Evolution's on the upper side of that.
Yeah.
But you know, in the current environment, you've just had a change in presidents in the US, which fortunately was peaceful. We've had the COVID pandemic, which Australia's done pretty well with, but we're probably talking to a lot of people who are in lockdown at the moment. You know, the gold price environment was very positive last year. It seems to have taken a breather. Where do you think we're headed on the gold price?
I think longer term, I think that the amount of money that's being printed, and you know, the US has just spent, was it 25% of its GDP, you know, over the last 12 months as a response to this pandemic, and the amount of money printing. And you know, we heard Jelen speak this last week, you know, basically saying low interest rates, spend. It doesn't really matter. But I think at some point there will be, I don't know if a day of reckoning, but you know, you have to repay those liabilities, and I think, or you're going to have to default on those liabilities. And I think what you're going to find is that they're going to default through inflation. So I think interest rates will stay low. We're already starting to see signs of inflation. You know, agricultural commodities up 42% from their low, industrial commodities 54%. you sense that, when companies, people start spending again, there's not going to be the supply there. So I think you're going to see a bit more inflation. And as long as you've got negative real interest rates, then I think that's going to be very positive for gold. Now, how high does gold go? I mean, there's a massive bond market out there that is looking for a hedge for inflation. So, gold as a percentage of global assets is probably 0.5%, 1%. 1980 it was upwards of 5%. So, these cycles are very big cycles. I think this is, remember we've gone from 1980 at the peak down to where we are now. These are very big cycles, and I think we're just starting. The low in the market was 2015. The gold price is up 70 or 80%. Had a bit of a correction, but I think there's it can go a lot further, and you just have to look at what's happening in the market, whether it's Tesla, Bitcoin, other technology shares, other shares. There's a lot of speculation out there.
Well, you mentioned Bitcoin, so I have to ask you about that. It's getting a lot of press at the moment as the alternative to gold. How do you see it?
So I'm not an expert on Bitcoin at all, but I kind of, as I understand it, it's controlled by 2% of the holders, and I kind of think that if you're not one of the 2%, you have to understand that. I like gold. Gold's got a long history of, you can track gold relative to other commodities, relative to the Dow, relative to other assets. So there's a bit of a roadmap that you can track with gold. With Bitcoin, we've only been going 10, 11 years. So, and I hear there's a lot of speculation. There's a lot of leverage in the market, but I wish people look, but I think I'm going to stick with gold.
Yeah, I'd have to say I find it difficult to understand how a government is potentially going to allow an alternative currency to be used for transactions which it can't track, and it can't therefore tax, and it can't see. I would have thought that governments are at some point going to have to regulate it, which has to be a risk for Bitcoin holders.
I think so, and I think the other point is the amount of energy it costs to kind of mine these Bitcoins and just keep the whole system going. And you are keeping, you're keeping your store of wealth. That's the argument that we're buying, in some kind of cloud somewhere, and then people go and lose their keys to find this thing. And it's like, I'm not going to stop anyone buying it, but I think you have to understand the risks.
Yeah, we're going to stick with the barbaric relic gold.
I'm happy
5,000 years. we'll probably we'll be gone before the gold's lost its luster. So just kind of shifting to your fund and how you think about investments in your fund. Your fund now has been going, you say, 20 years.
Yeah.
You said you're still working with Trevor. That's a long partnership.
Yeah, we've done well, really well. Yeah.
What sort of funds under management have you got now?
In our gold strategy, we're just over $1 billion US, and it's been a bit of a rocky ride over those 20 years. We've had a lot of money under management. Through the bear market, we've lost money, but since 2015, we've grown our funds quite dramatically, and a lot of that's through performance and restructuring how we're doing it. So previously, we used to look at a lot of the junior companies. Now we're concentrating more on the large caps. A bit of exploration, but the juniors, we've been burnt too many times. And personally, I kind of, when I interview mining companies, I see some of the fantastic projects that the majors have got. And I like the discipline the majors have got. There's a lot more ESG controls, and ESG is a big factor that we have to take into account. Our clients must take into, and rightly so. And and obviously we've got the dividend income as well. And so and certainly more discipline on the reserve, not from all companies, but a lot of companies. So for us, we found a good niche, playing those larger caps, and to me, it's a fascinating, it's an interesting game.
Yeah, it is. And well done for getting over $1 billion again. Because I think I remember speaking to you some years ago and it wasn't anywhere close to that.
It's been a journey.
It has. Well done. I mean, over the 35 years of kind of looking at gold companies and investing, you've had to have had some memorable trades. What would you kind of highlight as some of your best?
I think I was thinking about this over the last couple of days because, you know, we've had a lot of shares where, you know, they've gone up 5, 10, 20 times. But the key is having a big bet that goes up 10 or 20 times. And I remember in the 1990s when we Maker Asset Management, that was Western Areas and South Deeps, which was a fantastic re-rate. More recently, probably St Barbara's been a fantastic bet of ours. You know, we bet heavily invested heavily in the fund, 5% of the fund at 10 cents, and it went to $5. So that really gave us a lot of outperformance. So they've been the good trades, but there's certainly been a few bad ones as well.
You got any you want to mention?
I think Great Basin in South Africa, you know, that was looking at some of the lower grade material, and that was a tough one. And there's been many juniors where basically we gave them money and for various reasons it didn't pan out. But that's, you know, in this game, if you have you know, you can't get them all right. You've got to learn from your mistakes, and you've got to get yourself. There's always another story tomorrow. There's always another exciting development, and it's basically making sure you get more winners and losers. But even in the portfolio today, you know, we've got a few stocks that, you know, aren't doing quite as well as we hoped. But then you know, they're not massively, not big positions, but the larger positions we're doing quite well on. So.
And if you were talking to mining companies, which you do all the time, and we've had a relationship, I think, now over 20 years, which has been many lunches and dinners together and conferences. What would your advice be to mining company executives in the current environment about managing their gold companies to make them attractive for a Baker Steel investment?
Well, we're very interested in the margin. You know, when we buy a mining company, we're buying that margin over the ounces in the ground. So you know, our big focus at the moment is not lowering cut-off grades. You know, as the good times come, we don't want to see that our margins are compromised as cut-off grades are reduced. And so we want to see the margin, and we want to see a return of that part of that margin. Now, we don't expect all of that margin because we expect the company to grow and to reinvest in its business. But we do believe that, you know, we should get 10, 15% of the gold in the ground. And, you know, like I say, we're certainly starting to see this. You know, I had a meeting with a company this morning, not a development company, but a fairly large company which has got assets in Mexico. And, you know, half the conversation was when they're going to start paying dividends. And I'd never have had that conversation even probably 2 or 3 years ago. So I think the dividend message is an important message. And, you know, companies like yourself, Newmont, Polymetal, Centamin, you know, there's a whole B2 Gold, you know, there's a great Northern Star, you know, it's a great, and when I listen to a lot of my peers, you know, they're asking the dividend question again. So I think it's a really important question to show that there is discipline, and that when mining companies invest in new mines, that they're understanding actually how they're, you know, the return on capital, how much they're going to pay back to shareholders. And now there's always risk with mining, but regardless, I think they're the important messages.
Yeah, I think that's right. I'm an accountant originally, accidental miner, but yeah, I mean, the concepts that you're talking about, actually making some money out of the money you invest, doesn't sound that different to any other business that you may look at. And ultimately, that seems to be the message we're getting consistently from investors now. You know, invest our money prudently, but make sure you get an appropriate return.
Yeah, you know, I think that's right. You know, have the best assets. You know, I think there's, you don't want too many assets. I think that's a point, and I think you have to realise that gold is a scarce commodity. You can't, not everyone can find it and have the best ore bodies. So don't go and waste your margin doing things that. But I think we'll see a bit more consolidation in the market. I think there's some great opportunities for some of the mid caps probably still to get together. Some of the better ore bodies, there's a number of single mine companies which I think would benefit from getting together. Whether personalities or shareholders will get in the way of that, we'll see. But and I think that when I look at companies like Barrick and what Mark's doing and his wanting to get the best assets and the quality, it's fantastic.
You've spent a lot of time also on the road looking at these mines. What's some of the more interesting places you've been to? Because I see this as an industry that often you go to places where you'd actually pay to go if you're an adventurous type. But you must have been to some amazing places.
I've been on some great trips, and and the good thing is you go on these trips and you're seeing your peers on these trips. So it's quite a social thing. So it's not quite like going on holiday, but more recently I've been doing, before COVID, I was spending a lot more time in West Africa, Burkina Faso and Ghana and Mali and places like that. And then I've been wanting to go and spend a bit more time in Russia because I think the Russian gold companies are very interesting. I went many years ago, and South America, Australia. Probably 4 or 5 years ago, I was spending a bit more time in Australia. Not as much now. I kind of think there's, excitement elsewhere. Having said that, we're seeing the discoveries of De Grey and Bellevue and K92 in Papua New Guinea. So.
In 35 years, there wouldn't have been many mines in Australia you haven't visited.
I've seen a lot of them. Some I wouldn't want to go down again, but now
some of them you'd go down a lot further.
Yeah. Well, I think that's been the whole key with Australia, hasn't it? Basically the depth extension, which has been a fantastic story, and the Australians have done a fantastic job, leading the way.
It is good to see the resurgence of the Aussie gold sector.
And seeing the Aussies go offshore, Northern Star and yourself, and actually making, seeing things slightly differently is, I think, going to be a massive value unlock, as we've seen with Pogo and hopefully Red Lake, which we're starting to see.
You'll see it at Red Lake for sure.
Good.
COVID, has it affected your business much at all?
It really hasn't impacted our business, apart from most people are working at home. In terms of the investments, some companies have struggled more than others. Companies in Peru, South America have probably done a bit worse. South Africa had a few issues, but I'd say on general, the protocols of the producers has been fantastic. The way that they're doing the PCR tests and the testing and looking after their employees is fantastic. And some of that was learned from the Ebola crisis, particularly in Africa. But I have to take my hat off to how these companies have managed to get through this. It's still, we're not out of the woods yet, as we've seen with a couple of things, but it's looking very positive.
Good. Well, I think we've got to wrap it up now. Any final messages you want to leave investors or mining companies?
I think enjoy the bull market would be my, I always think in this game, don't get too caught up, and enjoy the cycle. I think that, it's not the end of the world if it doesn't kind of quite pan out as we expect, but the key is to do things safely and enjoy what you're doing. And I think that is the message I believe.
Thanks, David. Really appreciate your time, and enjoy Mines and Money. Thanks very much.
Thank you.